Welcome to the mid-year, mid-July, mid-summer edition of Market Perspectives. We just celebrated Independence Day here in the United States, but at Heritage we're also celebrating our 20th anniversary. So we were founded 20 years ago in July, and it just so happens that as I was looking back, we happened to be in the midst of a recession when we started Heritage a number of years ago. And as we're having that conversation right now here in the United States and even globally about recessions, it's just very ironic that we started Heritage during a recession. But welcome in. I thought I'd just take a couple minutes and just briefly update you on what's been happening and just kind of our viewpoints on things as we look forward. So it has been quite a year. You know, we had inflation, that was the conversation early on. Then we had the Russian invasion of Ukraine, which just exacerbated the inflation issue. And then we've had the Federal Reserve begin to raise interest rates, and they're beginning of this unwinding of the quantitative easing, or their essentially printing of money in the economy. And that has created quite a stir in both the equity markets as well as in the bond markets. We've seen the worst 6 months for US equity markets going back about 40 years, and the same for the bond markets going back to about 1980, since we've seen a quarter and a year this bad. The thing I would say about this, though, is when we enter these periods where the stock market's dropped over 20%, the bond markets have dropped better than 10%, it's crazy, but consumer sentiment is at levels that we haven't seen since they started recording this in 1978. But whenever everything gets so negative, so bearish like this, as we look out 12 months historically, both bond markets and equity markets are historically quite a bit higher. So when we go through periods like this, we have to remain patient. We have to stick with our plan and remember the reasons why we invested in equities. And the topic of conversation is the reason we invest in stocks is they are the one asset class that historically outperforms inflation. And it's just we have these periods that we have to get through. So really just want to talk a little bit about in what I feel has been going on here this year and even part of last year is it's basically been the unwinding of all of this COVID stimulus. Think back to the 3 stimulus packages Washington approved. We sent money to individuals. We sent money to people whether they were working or not. We sent money to states, to businesses, to cities. And people spent money during this time period. What we saw is retail sales in the United States during COVID went up over 26% during the 2 years of COVID. The prior 2 years, retail sales went up about 6%. So we had a 4-fold increase in retail sales during COVID. That would cause inflation during any time period, even without supply chain issues. So we had the closing down of the global economy. We had a ramp up in retail sales. People are flush with cash and we're spending money. And that's a big reason for this inflation. Now, as we're on the backside of all of this, we're seeing people are spending less on retail sales and are doing more, spending more money on services, travel, going out to eat, things like that, which will really help businesses begin to build inventory. Will also help some of the supply chain issues that we've seen around the world. Also, essentially, the world is open back up. So we're beginning to see things get better. You know, we talked so much about these microchips. Well, auto sales are beginning, they're delivering more and more cars each month. As consumers buy less electronics, you know, the automakers are catching up. I think the big story with these cargo containers is we had over 90 ships off the port of LA and Long Beach at one point. Well, they've got that down under 20 now. The bottleneck has just moved inland. Now it's at these railroad centers around the country. But we're beginning to work through that. And I think as we go through this year, we will begin to catch up on the supply chain. The other thing that's been a real positive for inflation is commodity prices. Commodity prices have come down significantly, both food and energy. Some of them to pre-Russian invasion levels. So right now we've got the Fed raising interest rates, trying to slow the economy. We have them essentially, they've stopped printing money, but are essentially now trying to take money out of the economy, tightening. The federal government is doing less deficit spending, and consumers are shifting away from retail sales. So we've got a lot of factors that hopefully will help ease this inflation pressure as we go forward. So the other topic is of course recession, and I can't make a prediction there, but I do believe if we had a recession, it would be a shallow recession and it would be short-lived, because American households, their balance sheets are strong. We're sitting on record amounts of savings. U.S. businesses, their balance sheets are rock solid, record earnings. States and cities all got government stimulus. So we're just not in a typical situation for a recession. So I believe if we had one, it would be short-lived. But the other thing about recessions is so often the stock market bottoms out before we even enter into a recession. So just bringing everything back around to, we will work through this period. And the Fed is committed to beating inflation, bringing inflation back to its range of 2 to 3%, which is critical, because inflation is a tax on everybody, and it affects the poor, the lower income the most, because they spend more income on just daily necessities and such. So that's been a positive in the market. The markets have reacted positively to that. So I say as we go through this great normalization, getting to whatever this new normal looks like, but we're moving down that path, and there may still be some bumps along the way, probably something that we don't expect. But again, we will get through this time period too. We just need to be patient. And if you want to talk in more detail, I'd love to visit with you. If you want to talk economics or just more about your personal situation. But I'm going to end with that today because there's just too much detail to go into here on this. And just want to let you know that in recognition of Heritage's 20 years, we are going to gather July 16th here in Houston at the Carbach Brewery from 1 to 4 for an open house. There will be beer. We will have a beer fest with some food, hors d'oeuvres, things like that, and then non-alcoholic beverages too. But we'd love to have you come out and see you then. So we look forward to seeing each and every one of you soon, and enjoy the rest of your summer. Thank you for listening in today.